From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, S&P 500 futures down 0.45% on the first trading day of July. Now look, we're going to do this a little differently today. We're not going to do all these highs and lows and volumes and all that. At the end of the day, the MOC came out, I think it was about 465 million to 500 million for sale. The futures got weak late in the day, like they always do, and then they rallied, and they caught everybody short. But look, you know, I want to talk a little bit about Friday's walkaway trade, and I really believe that what I was trying to tell traders on Friday in the room and on Twitter was that there's a tendency for these mutual funds to walk away on the last trading day of the month, and they did. Now, not only did they walk away, they sold $2.4 billion in stock on the close. That's a pretty big number. Now, that bled in today's trade. The S&P had sold off and then rallied a little bit and then failed, and then late in the day came flying back. But you know what? I think there is something to, you got to be a little cautious here. The PitBull's been warning about the last week of July into the third week of August as being extra volatile, and I think he's right. It's something that we've seen for a couple of years here, and it's kind of the kickoff to the very volatile or historically very volatile August to October. So you know what? We could be in for a little bit of a flunkadunk, a little bit of increased volatility, but that said, I don't know that that's going to happen right away today or tomorrow. Now, let's see. The other part about this that I want to talk about is there's an increased level of economic reports and earnings reports this week. And you know what? I think as we come in toward the tail end of this earnings season, the earnings are not coming out quite as bad as what they talked about. And then you've got the jobs report on Friday. So you've got a pretty busy week here. And then the last part I want to talk about is the liquidation in commodities. Now, we started talking about this a couple of weeks ago. And we knew that at the time when we talked about this in the room, we've got a guy that was in the meats that started talking about the liquidation in the meats and in the commodities. We knew that eventually this would weigh down on the stock market. And obviously today, with crude getting down to 45.08 in the front month September contract, you know what I mean? This is pretty weak stuff. And I think this goes along with Iran going back online and some of these sanctions being taken out where they're going to be able to get back in business. And I think really that's what we're seeing. And I think this has been kind of a push me, pull me type trade in the S&P. But then again, as we go out here, we're trading up at the 2090 level. And again, we're only 10 handles away from S&P 2100. So my question to you would be very simply, how bad is it out there? Now look, I'm going to leave it like that, you guys. We're trying to get back online. I've got a new person here helping me do this. She's a lot prettier than Jeff. I'm sorry to say that, Jeff. But you know what? I'm going to leave it like that, you guys. Markets are going out on a little firmer note than we expected, and we'll see you tomorrow on the opening print.